Hey, good morning, and wow, what a comeback on Wall Street. After a brutal week for tech, markets finally caught a breath. Hey everyone, it's Saturday morning, February 7th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now yesterday, U.S. stocks bounced back in a big way after days of selling pressure. Investors basically said, okay, maybe we overdid the panic, especially around artificial intelligence spending and big tech budgets. The Dow Jones Industrial Average led the charge, jumping about 2.5%. That's more than 1,200 points, and moving closer to the 50,000 level for the first time ever. Meanwhile, the Standard & Poor's 500 gained around 2% in its best session since May last year. And the Nasdaq Composite added roughly 2.1% as tech stocks finally caught a break. For the full week, though, the picture stayed mixed. The Dow finished up about 2.5%, but both the Standard & Poor's 500 and the Nasdaq still ended in negative territory. Now, some of the biggest tech names led the rebound. Nvidia surged more than 8%. Broadcom and Tesla also posted strong gains. But not everything was green. Amazon dropped around 7% after warning about massive spending plans for 2026, at least $200 billion, while its operating income outlook disappointed investors. Over in crypto, risk appetite also improved. Bitcoin climbed back above $70,000 after hitting a 16-month low overnight. Still, it's down nearly 20% so far this year. MicroStrategy, one of the companies closely tied to Bitcoin, reported a quarterly loss. Shares were shaky at first, but ended up jumping more than 13% as crypto recovered and management tried to calm debt worries. In Europe, Stellantis delivered some bad news. The company announced a charge of more than 22 billion euros to scale back its electric vehicle push. The stock dropped over 20% in both the US and Milan. And finally, looking ahead, the closely watched January jobs report has been delayed and is now coming out on Wednesday next week. Recent data already showed job openings falling to their lowest level since 2020, while layoffs are picking up. So yeah, markets breathed a little easier yesterday, but between tech spending, crypto volatility, and labor market worries, there's still plenty to watch. Alright, that wraps up today's Capital Markets Quickie. Join me again Monday morning for more market updates. See you then.